Right. I'm going to just share some, it's probably like some non-technical ideas first, because we have some truly excellent technical talks. I'm just going to discuss like the foundations of DeFi, and basically that is good for beginners, and also might give you some ideas how to communicate to other people that think that what we're doing is black magic, so it's incomprehensible. So this is basically, I'm just giving you some nautical ideas. Okay, this is how we explain why this is how finance was supposed to always been. My first part of the talk is completely non-technical. All right, so we're just gonna a few historical roots. We're gonna jump back 250 years to the Scottish Enlightenment now. So here we have, of course, Adam Smith, and in the Wealth of Nations, and then there is this thing about about sovereignty of the individual in commercial transactions. That there is well a sacred right of mankind. It is like some form like principle that is key to the Wealth of Nations. That's and of course, and the second quote about someone being judged in the local situation much better, I guess, to create like a local structure rather than having to rely on a centralized structure. So which is applicable to trusted systems as well, and decentralized systems. And again here, that's basically the principle that we shouldn't just kind of basically have a closed system where all the bits and pieces are centrally planned, but more like the nodes in a blockchain, that they basically can emerge and can join and basically be the self-organized and come and engage as they want. So these are some of his principles. Basically, he thought it was self-obvious for creating wealth in a nation from 20, 50 years ago. And here we have Adam Ferguson. Yes, nations stumble upon establishments. That many things again are actually happen from the centralized local principles and not because we kind of from central planning. So you could say it's like a maybe precursor to autonomous agents and as well and finally here we also here's about actually consensus. You can almost think of things establishing consensus and an agreement, two different parties. And again, like some form of order emerges from those interaction at like peer to peer by David Hume, which also advocated for basically don't trust, verify. I mean, David Hume also did express that basically we should not believe something if we can empirically validate it. So you will find his statue here, David Hume, and in Edinburgh. And finally, here this is Jeremy Bentham. About transparency, radical transparency, that without publicity, all other checks are insufficient. So only 200 years ago, they realized these are the optimal principles to create like wealth and a financial system. So, and finally, moving on to more the technology, we have this notion of credible neutrality in Ethereum. And obviously, both ancient Greece, Roman law, and medieval Martians, there were different ways to embody this credible neutrality. And now, basically, like, you could say that Ethereum and the EVM, this ecosystem, have basically just embodied this in a scalable way. And previously, this principle was embodied in a way like by humans in a manual way. So, yeah, so basically, so decentralized finance is not like something we just accidentally, like it's not an accidental afterthought. It seems that it's like a realization of basically even like 250 years ago, how they thought about what are like the optimal principles to create wealth in a nation, in society, and how finance were originally envisioned. So I hope this is something you can, I'm sure it's obvious to everyone here, otherwise something to share with your friends if this is not obvious to them. Okay, that was the past. Now we just focus on the present. So what's the point of having things which are decentralized? And of course, they can then work globally, and they're more secure, and we can enable a global economy, and with a 500 million of blockchain users. And actually, the number of crypto users is growing actually faster than the number of internet users. So I guess some people see it as the next internet. And actually, here's the thing. So people ask me like, but this thing has this revolution happened? Like this thing with DeFi and blockchain, like, is it like an idea? Has it happened? And actually, it has happened. But actually, it turns out it's not evenly distributed in the world. It has happened much more in certain places. And here's a very interesting map, which is the property rights index. So it turns out that where we live, it's like a bubble that basically that we can actually rely on a central authority to manage our money, and that they're like honest, and then basically do things for us. So this kind of like somehow slow down to some extent adoption of this. And there are you see a lot of areas which like bright color. We have a poor property rights index. So basically, they choose DeFi, and they basically choose having crypto wallets and blockchain to survive. Of course, including many places in Africa. So again, like yeah, this is something which works globally, both in places with good and poor property rights index. Well, what financial system do humans want? Actually, so the growth in the bank accounts actually globally is like around 3%. The growth in crypto wallets like around 25%. So globally, this is like what's growing, and there are 1.4 billion people still unbanked. Okay, and the reason why I mentioned that with the people being unbanked is also what led me into blockchain was when we tried to do send donations from Scotland to Africa, and then because there are many people unbanked there, and basically we tried every single like centralized way to do it, and we find they're either did not work or extremely expensive and slow, and that was what led me into blockchain. Yeah, so DeFi is much more like automated and is global, fast, and we just trust in the cryptography. And this is again, some concepts are the same in banking as they were 800 years ago. For example, here in Bank of Venice, things like deposits, loans, money transfers. And then you can bring your ship. If you're in Venice, you could bring your ship and say, "This is my collateral. Can I have like a loan in silver coins against this collateral?" And now we bring this collateral in as some cryptographic as some digital currency, and we take a loan, for example, on Ava, which is like kind of bank like the money protocol. So yeah, so some concepts sound the same, but now basically we have made them universal. Okay, and then there are two like philosophical systems that live on the blockchain side by side. And of course, this comes from Balaji that says there are these three principles for money: God, the stake, and the network. These are the three core sources. What does like give like a foundation like, value to money? And I've just focused on two of them here. So of course on the left one, first you think, okay, I pick a specific state, and then I infer from that some regulation, and I have an object on the blockchain which basically like points to this state, and that you can do things with that this centralized authority likes. For example, I would say CBDCs and maybe USDC because it is regulated. So it lives on the blockchain, but it's kind of like points to this central real-world authority, which is centralizing. And then on the right-hand side, things which actually do not point to that, and actually, like I would say, Ethereum and Bitcoin, which are you have the network as a principle. They don't refer to a state, and you just have code that manages things, and then they're decentralized objects. So I guess on the blockchain we have the trusted systems, and then some permissioned things that they kind of live side by side. Those two things, and however, these two worlds are not longer fully separated. So here we have something which is really highly regulated. So as someone mentioned earlier, BlackRock's BUIDL, this tokenized fund, and that is definitely regulated. However, you can take that this kind of token, but then you can use it as collateral for actually Frax USD loan because they kind of voted for that. And which there are still some rules for that, but it has some at least decentralized elements. So even though there are these two philosophical systems side by side, they're starting to kind of build bridges as well, and then kind of like collaborate. So this is one of those, and we almost managed to get Frax to come here next year. Yeah, and so this is like if Adam's now we're going to more to AI. I'm going to just finish this by talking about AI. This time, just like if Adam Smith was alive today, maybe he would say, "AI, from what I gather, is like a mechanical mind, capable of tasks that once required human toil." and that we do division of labor, which things do humans do, which things do AI do, and maybe then the blockchain is like an ultimate mechanism for dividing labor between man and machine, because it's so much easier to send the data to the AI using blockchain. And unlike a normal bank account, when you log in, they really want to know you're a human. They don't want you, they delegate to your robot to log into your bank account. Whereas on the blockchain, since the beginning, we always believed in this automation. So we made the interaction with AI and blockchain easier. All right, and then I'll just finish here. So today we have been looking at both regulated financial AI. So this is where, and that's of course as we all discussed, there are trillions in dollars managed there. So then the AI might suggest to something, okay, here is something you should do, here's the justification, and then the organization uses this suggestions then to make a decision, for example, in a fund. So it's still an organization and humans might be involved in approving things. And now, actually, when I was in Denver, I'm at millions of projects in the second category on the right side, which actually they are actually not regulated in a nation state. So these AI agents actually, well, they are fully decentralized, and they have wallets, which we'll later have a talk about that. And for example, Virtual's protocol, which I want to highlight, there you make your own agent, and you can, for example, teach it how to trade, and then actually you can then put your agent on the market, and others can actually come and buy a token or buy a stake in this agent, which again lives transcends nation states, lives on the blockchain. So we have these. Of course, they also need control, but they're not regulation in the conventional sense. So we have this, regulate financial AI inside the nation state, and then we have the decentralized, which has more freedom and can do more things in a way. And we'll hear more things about that. And finally, because this morning someone mentioned explainability, so also my own interest and my company I have is using this. So. The last thing just to say is let's not confuse statistical AI systems that some of them run on the blockchain, using LLMs and lots of data driven, and some of them are black boxes. Some most LLMs, and when they make and some agents which run on the blockchain are powered by LLMs, but when they make a decision to buy, sell, or say something, you can't actually ask them why did you do this. They might not know. Basically, they just do things without explanation. But anyway, these are two different markets. So that's one market, and then let's not forget there are other types of AI, not only LLMs and data, and kind of I'm maybe more interested in the second one, and that's why I did my PhD in that, and also inspired our product in the second one. So there we have basically systems that have mathematical proofs. And logical mathematical proofs, and they prove things with certainty. You still have the risk of bugs, but and then you can prove things, and you have complete transparency. So yes, I just want to highlight that both of these are used in AI and financial applications, and actually that live on the blockchain. And then the one on the left is probably cheaper and faster to use because it's more data driven. So I think there was just a few observations. Thank you so much.